Hello guys, welcome back to the Lumley trading video. In this one we are going to be doing some in-depth stock analysis for technical analysis over on the S&P 500. For this we are going to be using the SPY ETF. Reason for this analysis is we just really haven't done one in a while, and it could be coming into quite a key zone, so definitely something to be paying attention to. So on the left we have a 6-month chart, on the right we have the 1 year. These are standard deviation channels. If you've been watching this channel before you already know what this is. First levels to be paying attention to: 396.30 to 381.50. Now what this is statistical mean between the two charts. This, if you've been watching this channel you already know, is a range I never like to trade within. And the reason for that is this is considered fair value. And if I'm a technical trader, or if of all kind of the reasons for entry are off a technical signal, to me, there is no reason to enter within this area because, again, direction is a lot less clear in here, and it's just a bit more of a gamble to me. So within that range, not something I'm looking to trade. However, if we can start breaking down, then we'll have some support. So we do have a support at 380. Now, this could be a potential day trade, but considering it's so close to that statistical mean, definitely not something I'm looking to swing. If we did break lower, I have further supports at 364, going on to 359, and if we break lower, 350. I mean, they're the only ones we'll plot for now because that is quite a big move in the S&P, but definitely a thing I'm paying attention to. And again, that would take us down to kind of that year low, that 52-week low at around 348 if it did come down to that target. Now, if we end up turning a bit more bullish, we keep pushing to the upside, which again is definitely possible because what's happened now is obviously we've gone to the upside. Looks like we're coming back to retest statistical mean, and it's just whether we all bounce from here. But what are going to be those key levels to the upside then? So we have 404.50 and 412.25. So you can see this is kind of the previous targets that it hit, tested it once, pulled back, tested it again, starting to pull back. It's really watching this. If we start breaking below that 375, it's probably unlikely that we're going to go and break that new high, at least in the near term. But if we can start to break out of there, then we come into some fresh new deviations, which would be around 426 to 428. Now, these deviations are close together, which not only makes them stronger, but it just means they're going to be easier to trade. But considering they haven't been hit in a while, the first time we come into this, again, the way I'm looking to trade it is the first time we come into that level, I'm looking to play the pullback. What I'll do is once I'm in the money, move my stop to break even, take in a bit of profits. And the reason for that is just in case it is only a pullback, we make money. But if it's an overall reversal like here, if you catch in this first deviation short, you've traded its statistical mean, there was some good, profit within that trade. I mean, it came back, 4% in the S&P. That's still quite a big move. But, on the option side, that is definitely leveraged. And that's why I really like playing these, especially through options, because you can define your risk, but you can make a lot more upside. So that's one way I'm looking to trade this, or how I will be looking to trade it if we come up to the 426 to 428, either trading it through credit or debit spreads, or if the premiums are cheap, just through outright puts. If we broke higher, then I would have further levels at 445 and 450. I mean, these are the only targets we'll do for now because, that would take us to a 6-month high. Any move to, the bottom or the high of these levels, be a big move in the S&P, and really we would just update the video if we break out to either of those sides. But really the way I look to trade these levels, again, forgetting about statistical mean, I don't like to trade within this area. The first time I hit a level, I'm looking to play the bounce. If it ends up coming back to retest it, then I'm waiting for that breakthrough, come back to retest it, and if it holds, then playing to that next deviation. Again, this works on both the support and resistance side, and that's usually how I look to trade these stocks. Anyway, I hope you enjoyed the video on S&P. If you did, why not drop a like and subscribe, and I hope to see you next one, and that's it. Peace.